Hello, everyone. Welcome back to the Tonic Accord. This has probably been one of the craziest weeks I've ever seen in regards to news, politics, and just stuff happening in the world. Today, we're going to be talking a little bit about the GameStop short squeeze. Now, this is not normally an investing kind of channel. I mean, we're talking about it because there's actually a lot of big political implications, and it's a phenomenon. It's a worldwide phenomenon we all witnessed happen within a week, and we just wanted to kind of give you an update and maybe kind of what it means for the political sphere and what even is a short squeeze. So we'll dive into all that and more on this episode of the Tonic Accord. All right, so hi, Alex. I'm sure that you, along with many others, have heard about this GameStop short squeeze or the stock skyrocketing. And before we dive deep into it, I do need to kind of cover some like investing 101 terms, because there's a lot of things going out here that people may not be familiar with, like what is a short squeeze. And so I'll do it super quick if I can. Basically what it is GameStop in the last few years has been on a downward trend. It's kind of a dying company, as you can see. I mean, it's hard to tell with this graph, but it's been bumping up and down here if you're watching live, and it all the way down to $3 in 2019. So a lot of major hedge funds, not billionaires, but like hedge funds that are worth billions of dollars, they make money off of investing on other companies and reorganizing companies and restructuring and selling, right? So these hedge funds bet that GameStop stock would go down, and what that means is you're shorting a company. What that means then is you're basically reserving the right to like sell a stock at a shorter price in the future. You're like borrowing shares from your brokerage to then hope that they are worth less in the future, and you pocket the difference. Long story short is you're basically betting that the stock goes down. As the stock goes down, your investment goes up. A lot of these big hedge funds decided to do that against GameStop, who they viewed as a dying company. What happened is a lot of people online on a Reddit called wallstreetbets and other forums got wind of this, and they found out that almost all, and in fact more than all of the available shares that GameStop had were basically bet against, which means shorted over the period of time. And so they figured that if they bought a bunch of GameStop stock, it would drive the price up and actually screw over these hedge funds that bet against it. Now, when you bet against a stock, when you short it, if you're losing money, you eventually have to cover your position, which is basically buy back stock at a higher price. It's a really complicated stuff. If you do want to learn more about shorting and short selling, I do encourage you get like a more in-depth analysis. There's other YouTube channels for that. We're not an investment channel, but essentially, as the stock of GameStop went up, the hedge funds that were betting against it had to buy more GameStop stock to what's called cover their position, which in turn drove it up even higher. And so at one point, I said a year ago, GameStop stock was at about $3, and at one point it broke like $450 in the last week. Now it's down back to 85, and we're going to talk a little bit about, who's actually getting screwed by this. But essentially, hedge funds bet against GameStop. Online retail traders found out and used that risky position to drive the price up, and for a quick moment made a lot of money and cost the hedge funds billions of dollars. So now, with that in mind, we're going to talk about kind of the fallout and what we've been seeing in the political world as a result of this crazy stock market phenomenon. So I know I just dumped a lot on you guys, but Alex, as someone who's not investing or not a huge retail investor, as someone more of an outsider, what is your take on what's happening?
Well, boy, I think it was you who told me about this about a day before it really started blowing up. And I remember I was sitting at home the next day. We had a huge snowstorm, couldn't leave the house, and I was just watching CNBC and Fox Business all day. And I'm just going, holy crap, we are in a new era of just so many things right now. And I just find it fascinating how people on Reddit can mobilize. That's kind of my first takeaway, is that there was just this true community of, I guess we could say, quote unquote, the little guy who, kind of going off of that, I think I can't deny that it's nice to see this feel-good story of, these just random Reddit investors on stuff like Robinhood, etc., who could just kind of play the system and give these hedge fund managers kind of a taste of their own medicine. And so I think it kind of does show us that, especially like younger millennials and Gen Z people, they kind of have a different idea of how to maybe protest the system. And so obviously that's not my the financial angle to it, but in a cultural way, that's kind of what I see, is that it's interesting to see what's happening here more than anything.
Yeah, and I think it's worth noting that, you know, the hub of this activity is from a subreddit, which is like a type of like a specialized forum on Reddit. That is called Wall Street Bets. It's something that I've actually been a part of for over a year now. I think it's hilarious. I'm not as a degenerate of a retail gambler as these guys, but like I follow it, you know, for the memes, for the culture. Like I just enjoy investing memes and stuff like that. So I've seen this grow for a while now. The sentiment that, like, in my opinion, this whole idea of that this is like a revolution and it's anti-hedge funds and it's like a political statement is relatively new. If you go on Wall Street Bets, man, it's a lot of just, and part of my French, it's a lot of dumbasses just trying to gamble for money. The culture of Wall Street Bets has not had a long-term political bent. In fact, pretty apolitical, pretty much like just, you know, let's just make memes and make money and laugh about it. So I think what happened, though, is when they started to realize that what they were doing with GameStop was screwing hedge funds, it started to gain this political bent. And then what happened is when Robinhood limited trading, along with other brokerages, you know, these are basically applications and, you know, financial institutions that people utilize to do stock trading. So you go through Robinhood to then buy stocks, not just on your own. And these brokerages limited GameStop trading, and under the guise of we want to minimize risk of our customers. But a lot of people associate it with, you're actually protecting the hedge funds, because if you limit trading, you're limiting the amount of people that want to buy, which will definitely drive a stock price down. So a lot of people were accusing Robinhood of market manipulation. Why was there this accusation that they were helping the hedge funds? Is because Melvin Capital lost 53% of its investment portfolio in January alone, hurt by GameStop and other bets, right? And this is coming from the Wall Street Journal. That's one of these hedge funds that lost a ton of money. You know, you can see here that on Wall Street Bets, they were saying only 47% to go. Like, they hate these guys. They were making fun of them for losing all this money. So a larger, massive, big company investment firm called Citadel bailed out Melvin with $2.75 billion. Citadel is one of the main shareholders of Robinhood. I think they're responsible for a lot of their free flow of stocks. Like, it's hard. Again, this gets really into the weeds, but when I buy a stock on Robinhood, I'm basically telling Robinhood, like, they have their own pool of stocks. I'm basically buying it from them. If they need to get another stock, they buy it from a clearinghouse, and that they're the ones that see the actual trades of the stocks. So there's a bunch of different layers here. And so one of the layers is Citadel has a big stake in Robinhood, and Citadel also has a big stake in Melvin Capital, which lost a ton of money to GameStop. So when Robinhood limited trading, a lot of people felt that they were they were basically doing it to save their hedge fund buddies.
Yeah. And, just like as an outsider and kind of a dumbass in this stuff, my first kind of takeaway is just the moving pieces, kind of the rotating doors here between these apps, these politicians, which I want to get into in a little bit,
yes, and,
Wall Street business. And so, one side of me says, hey, cool, finally, like, this is kind of a peaceful populist revolt. Like, the storming of the Capitol was obviously horrible, but this is almost like a kind of evolution of that, in a sense. Obviously, don't misquote me on that, but it's a sense of trying to put a middle finger to the system, but without violence. But then at the same time, like, I think that really either side, the fact that either side, if you're talking about the hedge funds or these just small investors from stuff like Wall Street Bets, either way, I don't like the fact that you can just either throw money into something or not, and it can completely change the whole ecosystem of the markets, right? Like that to me, either side, if you're on the side of the hedge funds or of the Wall Street Bets crew and the Redditors, either side to me, I don't like the precedent of you can just uproot a market like this. And And yeah, on the Robinhood thing though, I do think that's quite alarming. And you mentioned market manipulation, and I was just reading up like a little bit before we started recording, and there's an interesting article by Bloomberg that said market manipulation is like pornography. You know it when you see it. And they basically talked about how it would be hard to really get either side of this really for market manipulation, because it's one of these controversial laws where you can't really define it, because by doing so you might call out the other side. So it's like basically like what I'm trying to say here, again, dumbass trying to explain this, is that like you could look at like Citadel and Robinhood for this type of stuff, but then at the same time you could look at the Wall Street Bet side for this. So it's like, do you really want to start pointing fingers and digging into this? I don't know, but again, I think it shows how volatile everything really is at the end of the day.
Well, I think we should dig into this, because what Wall Street Bets is like, I certainly understand how someone would be like worried that like a trend on Reddit could actually make, because I mean, let's be real, like Wall Street Bets here, let's see, has 8.3 million subscribers. And before this whole GameStop nonsense, it was about 2 million. So they've gained 6 million people in the last week on their forum. That's a lot of people with potential to buy. So I could understand how people are like, hey, we got to be careful about pump dumps. You know what I mean? But pumping, like where you try and get a bunch of people to pump a stock and then you dump it first, so that you're basically manipulating people to raise your stock price out of hype. Pumping and dumping is illegal. And but it's also not. It's not new. It's not like Wall Street Bets is the first place that this has happened. Well, pumping and dumping has been around since the internet has been around. And I think that you have to look at like what actually happens, because if you start saying that someone posting on Reddit that, hey, I like this stock, is now market manipulation, right? Like that's a slippery slope, because it's like, how is that any different than someone from one of these hedge fund managers going on the news and saying, hey, we're downgrading this stock to a lower tier? I mean, what does that mean? That just means they think it sucks. That doesn't mean anything actually. When you hear stuff about like blah, blah, blah was downgraded, that's just someone's opinion. But that could actually move that stock down 4 or 5% in a day if the right people say it sucks. If Warren Buffett said, this stock stinks, it would literally go down that day. And that kind of power like happens all the time when people go on like CNBC and say what they believe about a stock. I don't see how that is any different of someone on Reddit. Now, like,
totally.
So it's like, where do you point the finger? I mean, the thing is, it's like, where do you point the finger? Is it the them or them? It's like, yeah, well, we should have been pointing the finger at the inside traders and the hedge fund managers shorting stocks to manipulate them for years. Right. And in fact, there was, for a short amount of time after the 2008 financial crisis, there was a cap on you could not short a company for more stocks than there were out of floating around. Again, this is another tough one to explain, but that's the case with GameStop. Was they were literally borrowing against more shares than that even existed in the hopes that they would go down. Like it was what's called 141% of the float was shorted. So for basically, and if that doesn't make sense in your mind, that's correct. It should not make sense in your mind. That's why it's such a risky and an incredibly atrocious thing that these hedge funds did, which was like they bet against the stock so much that they like literally bet against more than even existed, which is hard to explain, but that's why it was targeted as, they are shorting the living crap out of this stock. All we have to do is just pump it a little, and this thing's going to fly, and which is what happened last week. So now, we talked a little bit about, let's talk more about the political implications. Last week, when Robinhood stopped trading, that was a big thing where all the calls against market manipulation came out, and we saw a really interesting thing happen, which was a very bipartisan or even completely nonpartisan outcry against what happened. You had figures like Ted Cruz, AOC, Mark Cuban, Elon Musk, Rush Limbaugh and Bernie Sanders all saying the same thing, which was it was a crime that there's manipulation against the small guy and the retail investor. What do you make of that?
Okay, well, first I want to say one more thing about market manipulation really quick. Absolutely. All I was saying is that from this SEC official from this Bloomberg article, all he was saying is that it's kind of a lost cause in prosecuting either side in this.
Sure. Okay.
Because market manipulation is really in the eyes of the beholder. So I'm like, obviously, what these hedge funds are doing, I would agree with you, is market manipulation. But then again, like if they looked into what the language of some of these Redditors were, they could also say the same. That's all I'm saying, is that like it would just get convoluted, and clearly the system is probably the problem more than in any individual cases. So that's kind of like how I feel about this. But actually, yeah, going into politics, I mean, I kind of see there is a divide between the establishment and the populace. Like, I mean, obviously that's been going on for a long time, but again, this kind of just shows that to me, is that like, because all the people you listed practically are people I would consider kind of anti-establishment for the most part, and the people that have been silent are, you know, a lot of corporations. I haven't heard a lot of people inside of the Biden administration talk, because Janet Yellen, for example, who is actually going to probably be recusing herself from any part of this investigation, because she was getting, I think, close to $1 million in speaking fees from Citadel. So while we're seeing, you know, people like, I don't know, if we're seeing people like Bernie Sanders and AOC speaking out, that makes sense to me, because them, Ted Cruz, Rush Limbaugh, I'm sure the Trumpian types all support this, right?
Right.
But then at the same time, I think that if you're, I don't want to like blame the Clintons or something, but just like an example is like, I think if you're like a Hillary Clinton-esque person, or a George Bush or something, like you're probably not too happy about this happening. And like I've noticed at the Biden administration in press conferences when they've been asked about it, there hasn't been a lot of responsiveness to it. Like Psaki, I think a couple days ago, was asked about it, and she kind of diverted the question to how they had the first woman running one of these investigations into it. And I'm like, that's not the point here. Like, you guys are diverting the question. I think it's really going to be interesting to see how the establishment politicians, because I mean, honestly, Biden's administration, in my opinion, is very establishment. Yeah. And I'm curious to see, I think this could be a breaking line into what they actually do going forward in terms of this stuff. Because like I said, Janet Yellen is probably going to be recusing herself from looking into this, you know, the situation inside of the SEC, just because of her connections. So while I think it's cool to see AOC and Ted Cruz and people like that agreeing right now, because I think we need more of that, I also think that the silence from a lot of the more wealthy establishment types is also telling.
Yes, 100%. You could tell who's like trying to go in on the populist thing, and for different reasons. For Igogos, I almost made $1 million, but I didn't buy, unfortunately. As I said, the fear of missing out can be real. Are you on the left or the right? You know, that's a little bit of a bifurcation, but I lean a little left. He leans a little right. We like to try and meet in the middle. We have a lot of varying opinions on different things, though, so it's hard to pin us down. You can, if you really want to get an idea, we have a YouTube video where we take political compass tests. But back to this. The political thing was really interesting because, you know, it's Wall Street has gotten a bad rep. You know, back to Occupy Wall Street thing. You know, for a long time, you could hear this. Like, the guy, you know, the liberal kid in Seattle with the purple hair hates Wall Street, right? But we've also known for years that, you know, the guy with the pickup truck in the South who doesn't invest and, you know, feels that he's been left out of the global economy. I imagine he blames Wall Street as well, and that's why you have people like Rush Limbaugh, you know, having a populist message against hedge funds, is because, you know, that's in line with what some people think. And you're right that, you know, I wonder if Wall Street will kind of be another punching bag again, similar to the Occupy Wall Street again. And I want to see what comes out of this. Interesting point you said about the mainstream people, though, like Mitch McConnell, or, you know, Kelly Loeffler or Joe Biden, who have a lot of connections with Wall Street.
Right.
This is going to be kind of a litmus test. You know, I know that I think it was last week, it was very vague, but as the squeeze was really happening, like at like the 400 mark, you know, the Biden administration did say that they were looking into it, whatever the hell that means. But, you know, it was a little bit telling, like, you know, are they going to have the retail investor in mind? Are they going to have the hedge funds in mind? The SEC has said when they're going to look into it, and they vowed to protect their retail investor. Who knows, again, what that will actually look like. But it certainly does kind of put some people, especially Joe Biden, in a sticky situation, because, you know, does he come out with some big regulations against the stock market? I mean, and then risk upsetting his buddies who maybe donated to his campaign, or does he risk, you know, limiting a stock market recovery? Right? There's a lot of big questions to this, but I think one, like, part about real actual change, I think it should be illegal to short sell a company over 100% of the float. Again, this is a weird kind of convoluted thing, but over 100% of GameStop's shares were like lended out to short, which is just crazy. So that should just be legal, because again, one of the things you have to remember when you short a company is infinite risk. I want to explain really quick. Have an interesting question for the panel? Sure, man. We go ahead and ask it. Hopefully we can get to it in a sec. So I want to talk about like risk versus reward, right? If you're just a basic investor with $1,000 and you invested in GameStop, the most you can lose is $1,000. The stock could go down to zero, which would be rare, but you could just lose 1,000 to zero, and that's it. But you could actually get an infinite amount of profit if the stock goes up and up and up and up, right? So you can only lose 10,000, but you can make who knows how much. Whereas on the reverse, which is the guys betting against GameStop with the short, they have the potential to lose way more money than their initial investment, because remember, if the stock goes up, their investment goes down, and there's no zero to kind of cap that out. The stock could just go up forever, and so they could actually owe on interest as well. An amazing amount of money, and that's what happened. That's why these bets are so risky, and that's why these hedge funds lost 53% of their value in January, because there was an infinite amount of risk involved with their bet.
Yeah, and if we had a more transparent banking and finance system in the United States of America,
yes,
I would hope that maybe people would be discouraged on both sides for doing this, because to be completely honest, like, I think, again, like I said, I think it's a feel-good story, and I kind of like to see people putting it to the system. It's just kind of intrinsically what I think. But then at the end of the day, I'm like, these hedge funds, they're prepared for this at the end of the day. And I do worry that some of these small independent investors really could lose in the big run.
Oh, and it's already happening.
Yeah, exactly. And so, like, obviously it's a good look. It's a great photo. It's, it's happening right now. But in a couple weeks, what's going to happen?
Yeah, I mean, look, GameStop's already back below $100. It peaked at like 400 and something.
Right.
If you got in on the hype on Friday and bought at 350, you're down a lot. It's down to $85 a share right now. So people are already getting screwed. Some people, if you look at Wall Street Bets, man, they're still in this. The whole meme is hold the line. Will it jump back up if shorts need to cover their position? Maybe. But I think that now it's not even a coin toss if it goes up or down. I think now you're going against market manipulation. You're going against Robinhood limiting buys. You're going against you're going against the house, right? You're playing against the house at this point, because they're stacking the deck against you. There's even another thing called short laddering, where these hedge funds actually trade back and forth with each other in a pre and after market to drive the price down. That's something that you can look at if you look at like NASDAQ live trades. A lot of people, like if you look at Wall Street Bets, people are tracking this stuff. Now, I'm not saying everything I'm hearing is true, but it seems like there's a lot of cards stacked against the retail trader now. And so if you're out there thinking, can I still get in on this? I would suggest no. I can't tell you what to do. I can't tell you what to do, but it seems like the squeeze is squoze. And so
one thing in there really quick. Sorry.
Go ahead.
Well, while you're on that, it's interesting because in the last day, silver is just soaring, right? And to me, it seems like a lot of people are like, especially the media, are basically saying like silver's the next potential short squeeze. But my worry is that there's a lot of big companies and big hedge funds invested in it. So is it like kind of a false flag, or is it trying to lead people to another one that actually could hurt them? Because I've seen online a little bit, and I know like some podcasters and YouTubers are talking about how don't buy silver, don't rally behind it, even though like I was watching CNBC yesterday and they were talking about, Pan American Silver, wheat and precious metals, they're up, buy them. And a lot of more conspiratorial minded people, so if you put on your tin hat for a second, they think this is just kind of a false flag or a lie to kind of get them to get screwed over. I don't know. What do you think about that?
I've heard that. I mean, look, I don't know where that whole thing, because I saw the articles that was like Reddit pushes another, is silver Reddit's next GameStop? And again, go on Wall Street Bets, man. They're not talking about silver at all. They even say they're the ones that are saying that like they're all trying to get us to buy silver for some reason. We don't want to buy silver. We're in GME. I mean, and, you can, again, like, you can just look at the culture of this website, man. Like, these guys are going to hold GameStop until they freaking die. And Mark Cuban didn't ask me anything on the subreddit today, and he even said to hold, which was crazy in my opinion. But it's getting very cult-like, and I don't see them talking about silver at all. They're talking about GameStop and AMC and maybe a little bit of Nokia, but it's pretty much GameStop all the way. So are these guys going to get burned? I don't know. I do think it. Again, if these guys shorted GameStop at $10, even though it's down to 85, these hedge funds are still losing billions. And again, they're paying on interest because they're actually like renting these stocks. So the big squeeze is probably done. These hedge funds are still going to be bleeding unless they cover their position. So I'm not exactly sure what's going on. They definitely did take the fight to Wall Street, but I'm hesitant to say that it will make lasting change. I'm pretty sure, one, most of Wall Street wasn't in on GameStop, so they were probably fine. And two, they're going to do things to make their money back and screw the retail trader over anyway. It's just going to take a little longer now. And they might. And the good thing, though, is maybe they'll stop shorting companies. Like, maybe they'll stop shorting companies this much and really trying to screw over companies that are on their last breath. I know that if I was one of the head guys at Melvin or Citadel, I would lay off the shorts for a little bit.
Yeah.
I'd put back on the long johns and lay off the shorts because this was just kind of crazy.
One more political question for you. It looks like Biden's cabinet pick for the SEC chairman has been delayed. He's Gary Gensler. And the Hill reports that he basically might be needed to break a partisan 2-2 split. So, like, A, do you think that could be bad? And B, do you think they should investigate things like Robinhood?
I think they should. I think they should investigate it. I mean, like, again, I think that if you have a coordinated effort by a brokerage firm to limit buying in order to save its own like hedge fund buddies, I mean, that is market manipulation, right? That's 100% market manipulation. So I think it should be investigated. I don't know if that is the case. I'm not saying that is the case, but it looks a little fishy. So I think it should be investigated. I know that the Robinhood CEO is actually set to testify or just speak to Congress in a little over a week, I believe. So we'll see what that's about. I'm sure that people like AOC and others will have some pretty heated questions. I know that AOC has really been trying to champion her movement onto top of this as well. You see a lot of like progressive liberals saying that this is, an obvious example of against any kind of market efficiency hypothesis, right? Not that short squeezes are anything new, but it'll be interesting to see what comes out of this in the long term. I don't think it's going to be much, though. I really don't think it's going to be some sweeping changes to the market.
No, yeah, I definitely agree. And I would say that, yeah, this just kind of puts a nail in the coffin, I think, to the idea that the stock market is a good gauge of the health of the nation's economy.
Yeah.
Right. Like the fact that either side could do this in the first place shows me that we should not be using stocks are up or down, dude. So, we're all doing well. Right. I don't think that should be a gauge of the health of our economic status of, average citizens, because obviously it can change overnight with no actual purpose.
Yeah, true that. I mean, there's a very good argument that the stock market is not based in any efficient reality at all, and it is no longer a representation of a real supply and demand. I mean, and GameStop's one of them. But things like this are rare, and I do want to make clear, like, just real quick, that like if we're, investing in the stock market is different than like day trading and gambling with GameStop. So for those out there that are very not, that don't know much about investing, this GameStop thing is not investing. This was gambling. This was just a crazy short squeeze. I recommend that you look into, safer long-term bets, because if you look at the market over decades and decades, it does go up, and it averages about 10 to 15% a year now. So, I am worried that I think a lot of people will get into investing with the GameStop thing, think they're going to make a bunch of money really quick, lose $500 in a day, and then never touch investing again. And it's like, they're very different things. So I do suggest anyone out there to look into long-term investing, be safe, be smart, and make your own decisions.
Yeah, that reminds me of the one time I gambled outside of LA at that like Indian casino. I forget what it's called, but yeah,
Pachanga.
yeah, something like yeah. I put in like $20, lost it, and I'm like, yeah, this isn't for me.
Yeah, yeah. Hey, at least it was 20 instead of 20 million, like some of the people have been put into GameStop. Yeah, there's a lot. I think we have probably what you think we should probably wrap this one up here.
Yeah, probably.
There's a lot we didn't cover, like characters like DFV, Deep Effing Value, who's now like a meme hero on Wall Street Bets. There's a lot here that we didn't get a chance to cover. Look into it yourself. It's a crazy story. I think Netflix is even going to make a movie about it. But if I were you, I'd stay away from GameStop stock. We'll see what happens, though. I could be wrong. That is this episode of the Tonic Accord. We'll see what kind of political implications this phenomenon has in the future. If you're watching live, stay with us because we're going to be talking about Marjorie Taylor Greene and kind of how we're seeing the next step of Trumpism manifest in politics and what that means for our government. Thank you all for watching and listening to the Tonic Accord. Oh, and thanks to the hard working and efforts of our friend Alex here, we are now on Spotify. So if you prefer to use that platform to listen to us, you want to go on a jog and just have Spotify on, we are now on Spotify. Check it out, the Tonic Accord. Thank you so much for listening.
Ciao.